Hello, folks. Signing in here is Sean Hubert. Signing here is Sean Hubert. So today we are just going to discuss a few things that most of you guys should understand, more especially when we talk about our price delivery, the models we use to collect liquidity, and so forth and so on. So on this price here, like we have always discussed, we have order floors on the market. We have order floors on the market, and whatever that you see in the market, it is what the market gives you. And most of you guys always want to and always try to trade against this order floors. But some of the order floors really explains to you what the market is doing at that time, and you can always see the manipulation whenever you see such order flows. So these are the things that you need to understand. We're going to discuss a lot of things of what is happening there. We talked about order blocks. We talked about other confluences that manipulates our price. So many times when you execute your price, you always ask yourself if you're on the right path. And every time when you ask yourself if you're on the right path, you always fail to execute because you know very well that things like this never seems to work on your strategies. But these are the things that we'll be talking about today so that you could understand what is happening in the market and why the market has to give us this kind of order flows, and what do you expect on those order flows? What do they mean? And what are we to do on this order flows? When you look at this price, our price was consolidating. Our price has been consolidating on this area. And in most cases, guys, I always tell you that when the price is within your area of consolidation, you don't have to find any entry until it breaks your structure. So this is an area that the market had to use as a supply zone, like it's our accumulation, our distribution level on this area. So I'm going to teach you order flow, how to identify order flows in the market. This is what I'm going to teach you, how to identify order flows and what are the order flows mean, and what exactly are we to do when we see some things like this, and what is it really that is needed in the price for us to execute such structures. I know most of you guys, you have heard about change of characters, you have heard about accumulation, distribution, liquidity, imbalances, fair value gaps. You have heard about all those structures in the market, and in most cases, you guys, you seem not to understand how to trade them, how to trade supply and demand, how to trade support and resistance, how to trade all those things, because those are the things that in most cases make you guys to fail. And you ask yourself, you tend to ask yourself, why me? Trying to better up yourself and you're failing to get some answers. Well, I have an answer for you. When the market gives you structures, you don't have to trade against the structure. Our main order flow started on this area here. This is our main order flow. I'm going to explain to you what I mean when I'm saying it's our main order flow. All right. This is our main order flow. This one here is our main order flow. So this main order flow that we see here really tells us that the market was having an impulse of buyers. Okay, we have more buyers than sellers in the market. All right. So hence you see them giving you this kind of a strong order flow that you see happening right here. Well, because of the accumulation of the market on the structure, the market couldn't break this resistance area because this resistance area was too strong for the market. So anything could have happened in this market for it to return. That is hence we see on that price right there, we had to break the structure to change character. So when you see the market doing that, it means that the market right here, since it broke this previous high here, okay, since we broke this previous high here, the market was changing its character now to show you that since it was selling, all right, since it was selling all the way there, all right, the market now had to break there to change a character, because this area above there, that high that I've shown you guys there, it is our inducement. So right here we'll say the market was giving us a liquidity on top there. Okay, so our liquidity was resting on top here because that area that is where everything was happening above there, because it's an area of inducement. So I always define this liquidity as our buyer's liquidity that is seated on top here on this high. So there are two things that you need to understand when we look at this structure, because in most cases people, they don't understand why we have to retest on that area. You see right here we had a fair value gap that the market has to come and clear. That is what we call a sell side efficiency. That was our fair value gap. So right here also we also have the breaker block that the market used. Right here there's a breaker. All right, that is our breaker block that the market has to come and use it also as our support. All right, so our entry there was supposed to be that fair value gap, but the market still had a potential. All right, the market still has a potential to come and fill this efficiency right here for sellers. You see that efficiency right there. So we have an efficiency that is left off also for sellers. So we don't even know where we're gonna pick it up, because right here there were some traders which were cut short below here. All right, if you go to the lower time frame, you see this consolidation right here. So this area here is where most of you guys who always blow the account were cut short on that area. Okay, so that area there, this zone here, that is where you find impatient buyers and sellers. Okay, myself, I call it trap shorts. So they're trying to buy, they're trying to sell, They were trying to buy, they were trying to sell, but they were cut short by the market. Okay, they were trapped short by the market. So this area here, that is where impatient buyers and sellers came into and created that structure of consolidation on the discount zone. All right, so you can see, but the order flow here, an order flow simply means that the market is pushing high with higher momentum of bullish. So there is no way how you can trade against the structure. All right, when you enter in a trade and you find a structure like this, giving you this momentum, okay, just know that the price is just going to be bullish for like a long time. You can see even right here, the market was still giving you an impulse, all right, of buyers. So that is one thing that you should understand. It's not supposed to be difficult for you to understand what is going on. So structures like this, all right, structures like this consolidation, yeah, these are the structures that you really don't have to trade in the market. Okay, you don't have to trade them in the market, because inside there you can explain what was happening there. So in most cases, structures like this, stay away from it. Okay, stay away from consolidation. I know most of you here, you always like trading it because it gives you a very nice entry, and it really makes you not to trade. It has to make you to trade against liquidity and all that. So we know, and we've been there before. But what I'm trying to say here, I want you to be a profitable trader. So you can't be trading against what the price is giving you. So trade with what you see in the market. Don't trade against it, because if you trade against it, the market is going to take you out. So make sure that you trade with what you see in the market. So right here, the market was also giving us, on this structure, the market was also creating liquidity, right? So the liquidity that it was sure that it was going to take. So you can see that this order flow here, all right, this order flow here also tells us that the majority of the price sold out like for a very long time. So the market sold out for a very long time. Now it was time for the market to change the character, all right, to change the character, okay, to just give us that that bullish movement that you see, that is current on that movement. All right, so that is what you see there, guys. Tomorrow I'll be teaching about a lot of things like order blocks, so you guys you could understand what really an order block is. So these are the things that you really have to understand. Our order flows, this is what we have. So our chart really looks like this. So if somebody will ask you what this price is doing here, the answer is the price is bullish. And as long as this price has not mitigated this low here, and you can see that this price gave us this return or this reverse on our equilibrium. So if you can look at that high right there and that low, you'll find that the market was consolidating at your equilibrium, and it broke from your equilibrium. So when the market is doing that, it shows you that the market still has a strong momentum of buys, okay, in the market. So make sure that you study this thing, make sure that you study this thing and you learn how it is. So it's up to you whether you trade looking at what the structure is giving you, or you trade according to how you have identified the price. So I really appreciate your time, guys, for learning this. And I'm sorry for the video if the video was going to be short and everything. So I think I will see you again on our next lesson that we'll be having end of this week. Thank you, guys.